private banks will now be allowed to accept EPF deposits as well. So all of this is very, very interesting, and let's talk about that with Shankar Aggarwal, Secretary, Ministry of Labour and Employment. He joins us right now on the show. Good having you, Mr. Aggarwal. Thanks so much for joining in. Now, you know, the first year you've had equity exposure by way of by ETFs to the tune of 5%. What we hear is that there is a belief or there is a possibility that exposure may be taken up to 7.5%. Are we to presume that you've been happy with the first year performance and therefore there is this consideration that the exposure be increased almost immediately?
You see, it's not a question of being happy or unhappy. Last year, we took a very historic decision to invest in equity, and we thought that it would be a good idea to invest up to an extent of 5% of our investable funds, because this was the first time when we were investing in equity, so we were cautious. In last 1 year, though the results are not very stunning, however, we know that when we invest in equity, we invest for long term and not for short term. And in spite of the fact that a lot of labor unions are opposing this move, we told them and we proved through various studies that it is always better to invest in equity in the long run because the yields are higher. So after 1 year, though as I said a little earlier that the results are not very stunning because it depends upon the behavior of the market, but we are very confident that in years to come, and as the economy of India is bound to go up, we are sure that our yield will be much, much higher than our investment in debt funds.
From the exposure of 7.5%, Mr. Aggarwal, that you're mulling now, are there chances of gradually taking this number even higher next year? And if so, what do you think it could be taken up to, say, in the next 2 to 3 years? And what are the parameters that you would actually consider before upping this rate?
Absolutely. You see, as per the limits fixed by the Ministry of Finance and by the Ministry of Labour and Employment, EPFO can go up to an extent of 15% of the investable funds. But as I said a little earlier, we had to be very cautious. So we are going to increase this limit of 5% as of now from present level of 5% to higher level in phases. I cannot tell you exactly how much will it be increased to, but certainly in phases we are going to go up, and at some point of time we are going to touch 15% of the investable funds. And as you said, what are the parameters? As I said, we have to watch the capital market very, very closely, and if we feel that because of certain reasons, because of some unforeseeable condition, the capital market is not behaving very well, maybe we will delay our decision. But at the moment, things seem to be pretty fine, and the Indian economy is bound to improve and improve very much. So there is no reason to fear that our investment in equity would not go up.
Clear the air. When you say that you would be increasing your commitment towards equities, you would only invest the incremental surplus. You will not be dipping into your large kitty.
No. As I said, that we are basically investing our investable funds. So that means what? Whenever we get some additional incremental funds, and whenever we get our funds on the maturity, those are available for investment. And out of that, as of now, 5% goes into equity, which will be increased subsequently in phases.
Can you tell me the exact quantum of how much you've invested in equities so far? We have the number for last year, but what is the number for this year?
And as I said, we do not have a fixed number. It depends upon the maturity as well as the investment, which are incremental investment, which are available to EPFO. But we expect that this year we will be investing something like 8,000, 9,000 crores rupees.
As of now, you are only investing via the ETF route. Would you be considering other equity instruments to invest in equities?
That's right. As of now, as I said, this is the first year, we got to be very cautious, and moreover it is the employees' money. So, we cannot take a big risk. So, we thought that it will be a good idea to invest in ETF at the moment, and maybe once we gain a little bit of confidence, maybe in another 2 years time, we will start looking for other opportunities as well. That means investing directly into the equity rather than investing through ETF route.
Mr. Aggarwal, two questions really. First is, by when do you think such a decision could be taken? One. And two, I believe you've solicited or received applications from fund managers. Are these applications for fund managers who will help you invest in ETFs, or is this a precursor to you starting investing in other modes of equities as well?
You see, first you asked about the timelines.
Yes.
As I said, we cannot give a timeline. It depends upon the level of confidence, and ultimately all such decisions first will be discussed and decided in the Central Board of Trustee meeting, and today we have got one meeting of Central Board Trustee, and however the final decision will be that of the ministry. Secondly, you said that a lot of fund managers have already applied. Yes, but then we thought that it would be a good idea to restrict it first to the government entities. That means today we have got only the SBI mutual fund as the ETF manufacturer, and we are hoping to have one more agency, but that agency has to be a government agency. That means like a UTI kind of a thing, and thereafter maybe in subsequent years we will go in for other entities as well.
So currently, how exactly are you investing your investable surplus, and what is the average yield which you are getting given the fact that interest rates are coming down?
As you know, we are managing about 11 lakh crores of rupees, and out of that about 3 lakh crores rupees are managed by the exempted trust, and the balance about 8 crores of rupees are being managed by the ETF directly. Out of that 65% goes into the government security, the G-Secs and other security, and the balance out of 35%, 30% goes into the private sector and the public sector bond, and the balance 5% is invested into the equity. But this arrangement can be changed. It's not a very hard and fast, but however we got to have the approval of the Ministry of Finance.
Tell us a little bit more, Mr. Aggarwal. Which are the other firms which are in the race to manage the EPFO money for FY17? Because right now, as per our understanding, it's only SBI which is looking after the EPFO money.
Yes, as I said a little earlier, last year when we started investing into equity, we thought that let us take advantage of the SBI mutual fund as the ETF manufacturer. But now we again a little bit of confidence, and we thought that instead of relying only on one ETF manufacturer, let's have two ETF manufacturer, and that is what we are going to decide today, to have one more ETF manufacturer. You said about the kind of return which we are getting now. On an average, we get a yield of about 8.5 to 9%. As you must have seen that this year we had declared a rate of return of 8.8, which is the highest for any such investment fund. And as you know, when we invest in EPF, it is a tax exempt. That means it is exempted from tax at the time of investment. It is tax exempted at the time of accrual of the interest. It is tax exempted at the time of withdrawal.
Exempt. But you just talked about, Mr. Aggarwal, earlier on that you could also take exposure of the EPFO fund to equities to maybe even 15% if the markets are ripe. Would you have a timeline in mind, considering right now, both with the economy and equity markets, barring a few global parameters, everything seems to be in shape. Would you have a timeline to when would you plan to take the exposure to 15%?
Yes, ma'am. we expect that within next 3 years, we should be in a position to extend it to up to 15%. But as I said, it all depends upon the behavior of the market. It all depends upon the decision to be taken in the CBT and thereafter in the government.
Well, let me get closing comments from you. You've declared a return ratio of 8.8%, the highest I can remember in a long time. But given the fact that interest rates are coming down, the government 10-year paper on an average is trading between 7.5 to about 7.7%. Do you think for you to maintain such high payout ratios would be difficult?
You see, there is no doubt as the economy is going up, the rates are going to come down. And when the rates come down, it is better to invest in equity rather than investing in debt funds. So, we are keeping our eyes on all such development, and that's why I said that we are very hopeful that in the next 3 years, we will be able to raise our participation in equity from the present level of 5% to 15%.
So, the closing comments clearly has to be, and this is I'm asking on behalf of millions of unit holders, maybe the number I'm sure is into crores.
I can't hear you, ma'am.
Should they expect historical returns to stay, or do you think now historical returns are unlikely to repeat itself?
As I'm very hopeful that because of our investment in the equity, our subscribers are going to have a better return. But ultimately, it all depends upon the behavior of the market.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.